All right, let's get started. So, did have some requests for the um, ancillary products, the dental, vision, hearing, hospital indemnity, kind of all the above. And so, what do we sell? What do we not sell? How do we get that? When do I sell it? When do I look to sell it? All of that. So, I want to do that. Let me see if we can. Let's let's get this share screen. All right. Can everybody see the ancillary products and when to sell them?
Yeah.
Yep.
All right. Cool. Hey, Jason.
Hey, how's it going?
Good. We're just getting started. So,
Okay.
on the screen here, we've got the ancillary products and when to sell. So, all right. So, ancillary products, it's just exactly what you would think. It's nothing, it's not the major medical policies, it's not life. It's just extra stuff. So it's outside of that major medical, it's outside of the life, and it is designed to fill the gaps. Is anybody getting an echo, or is that just me?
Yes.
I don't hear one.
See what we can do here. Why is this? Let's see why this is. Yes. We're gonna get rid of it. See here. All right, I'm still getting the echo, but I can deal with it now. Okay. So goals, we got 3 goals. Obviously, we need to know what those ancillary products are so that we can contract with them and sell them, and know how to pair them, and then how to present them in a way that's not like real selly and salesman-y. I was talking to our new Humana rep about it this morning. And when he used to sell in Florida, he said, "Oh, I didn't sell that many ancillary products," but he said the guys who did it, they worked it in like it was just part of the conversation. So that's the goal. So with TLC, we have pretty much everything on hand: dental, vision, indemnity policies, cancer policies, accidental, long-term care, critical illness, disability, and income protection. Now, I've not sold all of these. Long-term care, I'm not even contracted with. I don't really care about it. The other ones I've all sold, and some have been younger than 65. Most have been over 65. All right. So, oop, go back one. There we go. So some definitions, when to use them. Of course, the definition of it is big here. So long-term care, that comes into effect after you've exhausted your Medicare Advantage plan skilled nursing or your Medicare supplement skilled nursing. Dental, vision, pretty self-explanatory. Hospital indemnity, that's the one that I honestly work with most often. Carriers for all of these, you can see, I'm not going to read through them, but I will say on the dental side,
I tend to lean more towards emeritus. The vision also emeritus because it's IMED and VSP. And then the indemnity, it just kind of depends. I really like the GTL. The Wellaby's a nice plan. I know that if you know Chris Wildman, who's up in Akron, he does a lot of Aetna, but there's also a Cigna plan. There's a Med Mutual plan. So it just kind of depends on the situation. But GTL and Wellaby on that indemnity, those are nice to work with. Very easy. The critical accident or disability protection or cancer, I like all of those because you can go to the same GTL website and pick and pull whatever you want. I'll be sending out this slide deck so that you can just have this information on hand. That way you know what's what. All right, so starting the conversation, the big thing is knowing that this is not going to be leading everything. You're gonna meet with someone because of something else. It's going to be because of the Advantage plan or the supplement or the life policy. For those of you who are selling ACA, it's something you could pair with that too. So those are what's going to get you into the door, but these gap fillers in the ancillary, those are what provide that extra value for you. They now know, hey, I've got something on top of my major medical with this guy or this gal, and that provides the value for you. They see, oh, I don't want to move my Medicare policy, or I don't want to go somewhere else for my ACA or my life coverage because, well, these guys really helped me out. The gap filler, I like that kind of a terminology for all of these, just because most of the time people are scared of some of those major amounts, the MOOP or hospitalization stay or surgical costs. So that's where these plans come in big time. Additionally, a lot of people just don't know what's in their policy, and it's our job to know that. And kind of, well, kind of like our motto says, build barns, help them protect for the future. So you say, hey, you know what? This plan is a great plan, except it's got really high surgical costs. So maybe you want to add an indemnity policy. So if they had to go into the hospital, there's that. But it also has an outpatient surgery rider that they get what do I want to call it? Lump sum. By the way, if you have any questions, just feel free to chime in. All right, so then when do I offer these things? We know that those aren't going to be the things that we lead with, but how do we bring up that conversation without sounding too much like a greasy salesman? A lot of it is real honestly reading the client. They will tell you in their nonverbal cues, they'll tell you with their words too, what they're scared of. So if you're selling a life policy, a lot of times they'll bring up, oh, can I use this for a long-term care plan? Or can I use this to protect against if I have cancer? Can I borrow against it? Can I draw it early? Can I use this if I go on disability? Is there a penalty? If you're selling them a non-Medicare health, so ACA or short term, most all of those don't have dental and vision included. And to bring that up, that's not out of the world, out of this realm of being common sense. You say, hey, you know what? Your plan doesn't cover dental and vision. I just want to make sure that you know that. And oh, wow, I didn't know that. Can I get coverage there? And now they just brought it up and you can sell it. So they think it's their idea. I'm not saying we're baiting them into that, but you're making them think about these types of things. Additional hospital indemnity plans. I think those are the most underrated plans that are out there. They'll cover a minimum of just being in the hospital, but you can add riders, especially with the GTL and that Wellaby plan, to add cancer or ER visit or gosh, actually there's some dental riders on it, or critical accident. And then with Medicare, those obviously tends to be that those people are the least healthy of all of our clientele. And so we need to just straight out ask them, hey, are you worried about dental? Your supplement doesn't cover vision. I can see that your eyes got big when the max out of pocket. We told you about that. There's ways to guard against that. And it's not being a salesy. It's looking out for their needs. And again, a lot of these times when I do sell these policies, it's based off of just either conversation clues or nonverbal cues. The way they look at you when you say a number. All right. So on life policies, again, if we go back to this, we're kind of looking at those long-term care plans or disability / income protection or cancer policies. So some of the questions that might lead these clients to think about those needs, what type of expenses are you wanting to cover with this policy? If they're 65 and older, typically it's going to be final expense. So that's probably not the time to ask to be pushing those ancillary products. But if they're under 65, and they're wanting to set aside some money for someone upon their death, or they want the protection that long-term care type of plan without buying long-term care coverage. Those types of questions, those should be asked anytime you're writing life policies. Probably, I would guess Danny is probably writing the most life. So that's something that bring it up with every single client. It's not being too forward. This is asking, hey, look, I'm here to help you plan for the future, and I need to know. On the non-Medicare health side, so typically younger than 65, have you thought about dental and vision? This ACA plan doesn't cover dental and vision, or this short-term plan doesn't cover dental and vision. Do you have any fears about this plan? Obviously, when we go through the entire presentation with any Medicare or pre-Medicare health, they'll tell us what's, oh, these are big expenses for me. So ask about it. Do you have any family history of health issues? That one more for the cancer side of things. A lot of times, they are very willing to bring up, we've got a history of cancer. And if that's the case, great. Have you thought about how to protect yourself, how to guard against that for the future? With those cancer policies, they work similar to Aflac. If you're familiar with Aflac, it's once you get that diagnosis, then they'll just cut you a lump sum check. So that type of cost, they'll say, well, my major medical, I'm capped max out of pocket at such and such a number. and this number is higher. Maybe you wrote them on a $20,000 cancer policy, but their max out of pocket is only 10,000. And the number one question I get on those is, well, do they only give me the 10 because my max out of pocket's only 10? And I said, well, no, it works exactly like Aflac, where once you have that diagnosis, you get that amount, that $20,000 that you agreed to, and you can use that amount for anything that you want. So if you go have your chemo treatments at the James, you're going to have gas costs driving up and back. You might have a hotel cost, or a spouse has to stop at McDonald's or something. You can use that money not just to pay your medical bills, but it's for all of the things that go into that. And telling them these things, that's a big deal. They don't understand that even though it is health insurance, because it's not major medical, the way you use it is not the exact same as their standard major medical policy. Does anybody here have one of those types of policies?
No.
Okay. I actually wrote my family on a cancer policy, a renewable cancer policy, which renews every, I think it's 5 years. And it's $10,000 per, what is it? Per person, per occurrence that renews every 5 years. So eventually I'll probably get rid of the kids, but for the time being, I think it's a good investment. And I tell people, yeah, I think it's a good investment just because it's a protection for me against the future. And that's the biggest thing that they're looking for is, why do I want this insurance? And you're not selling it, you're educating. Just like any other insurance that you've sold to someone, all you're doing is educating, and let them make the decision. All right. So if you notice, when we change from the non-Medicare health to the Medicare health, the questions are the same. And I think I kind of alluded to that in the last slide, but with a MedSup, I really don't look at any additional supplemental health coverage. So those cancer policies, the indemnity policies, I never talk to those people about it, because that's what the supplement does. I do talk to those people about dental and vision. I say, hey, your MedSup Plan G, Plan N doesn't cover dental and vision. Is that something big to you? And they'll tell you, if they say yes, great, let's look at it. And if not, then don't. And but let them know dental and vision has no real enrollment periods, so we can add that anytime throughout the year. If they go with the Advantage plan, the MAPD or MA, you'll always be able to read their body language on specific costs. A lot of times the MOOP or the hospitalization or surgical costs, when you tell them 20% for chemo or radiation, they get uncomfortable, and rightfully so. So by reading that, you say, this max out of pocket, I know it's really high, and it's whatever it is, $5,500. And a lot of times what drives that cost is for those people who actually hit that max out of pocket. You're looking at hospitalization, you're looking at chemotherapy, radiation, and there's ways to guard against that. So, maybe we look at an indemnity policy that, sure, you'll still have to pay your hospitalization bill, but then you turn it into GTL or Wellaby, and they'll cut you a lump sum check. So you get reimbursed for the whole cost, or even more. Some people write it for, it might be $450 for their hospitalization, and they wanted a policy for $500 a day. So they're actually making money when they go into the hospital. Or the cancer policy, the radiation, the chemotherapy. maybe their max out of pocket is 5,500, but they want a $10,000 cancer policy. There again, it's not a guarantee that they'll hit their MOOP. It's pretty likely if they're on radiation and chemotherapy, but you just help them with that cancer policy to where they're going to get everything reimbursed as soon as they turn in to the company, the carrier, that they have a cancer diagnosis. So it usually historically hasn't taken too long on the turnaround for the reimbursement. And most people aren't hitting that MOOP, within 2 weeks, 3 weeks of getting a cancer diagnosis. So a lot of times they will have that money, that check in hand before they're already doing chemo or radiation. Again, they will tell you exactly where their fears are, and we have policies that can help with those. Any questions so far?
Jason, maybe, I'm assuming this is probably coming up somewhere later on, but I've not done anything outside the Medicare realm. So I have two questions. As far as doing the Medicare stuff, the pre-65 stuff in particular, which is sometimes, I've referred people to you, which in the future, I'd like not to refer them to you.
Sure.
No offense. So is that just additional training we have to go through with the insurance companies? Like we do all the stuff in the summer to get, all of our certifications on the Medicare side, that's just additional trainings to go through, and how do we access those if we want to do them?
Good question. So for like short term and all the ancillary stuff, it's there's really no extra training that's required in order to get contracted. Some of them, I think you might be contracted with Med Mutual. They used to contract you automatically with the short term as well as the Medicare. I don't think they do that anymore. So we can I can talk to Kayla about getting you contracted for that stuff. I know the United Healthcare short term is a different contract, but there's really no set training that you have to have year over year for that. It's kind of a, hey, if you know how the plan works, you can go sell it. If you're contracted, you can go sell it. Now, that being said, there are webinars that each of those companies will run for them, and actually the indemnity plans their carriers will run. I did a GTL webinar 2 years ago. They were, oh gosh, the presenter, whoever it was, she was awful. She had all the information. She just, I don't know, she read straight from the slide, and it was kind of boring. But most of the time those trainings are good. They tell you the types of situations that people are looking for those types of products. So but no, I don't think it's never been that there's extra training you have to do year over year for that.
My follow-up is, obviously being able to provide to whatever our clients need, obviously that's super important. Secondly, of course, is the commission side of it. So again, never having sold anything other than Advantage plans, supplements, and some standalone dental and vision here and there. So I kind of know a little bit about at least Emeritus, their commissions, but what are the commissions like on like the indemnity plans and then the life insurance plans?
Yeah, so life policies, those can be kind of all over the place. We've got a new system that we're working with on the life side of things, where we can quote across about 160 different carriers right now. And the contracting with that is basically, as you write the policy, you're contracted with the with the carrier. And honestly, those policies pay anywhere from, gosh, I think 25% on the very low end up to like 80%, depending on the size of the policy and who it's with, and what type of policy it is, whole life, universal, term. Um, so those are a one-time payout based off of the yearly premium. And again, ranging from 25 to I think 80%, depending on the carrier. Um, on the indemnity policies, those are all percentages and they range from 15 to 20%. I've never seen anything over 20%. Some of them will pay just the first year. Some of them will pay 2 years. I think I write most of my stuff through GTL, and I want to say that they will pay, I think it's 15% the first 2 years that the policy's in effect. So for instance, if I wrote someone who, let's just say the policy's worth $1,000 in premium for the year, those first 2 years I'm getting $150 off of it. So it's not something that's going to make you rich, but you add it on to an MAPD or some other plan, it's nice. Plus, again, it adds the value. The clients see that, hey, this guy went out of his way to ask me if I need something else, or I have other fears, that type of thing.
So you find, I mean, there are a decent amount of people who are on the MAPD side who are willing to pay. Again, as an example, you just used $1,000 or whatever, $80 a month extra for that.
Yep.
And obviously not everybody, but more than a few.
There's a lot. Yeah. I've kind of made it my goal the last year or so to just sell more of those. And I would say when I make an effort, I would say 40 to 50% of people are willing to hear about it and look at it, and they see the value, especially the people who, if they're healthy now, and you got that guaranteed issue on the underwriting, and let's say they go with the cash back. Actually, I just met with a guy 2 weeks ago. No, 3 weeks ago, during OEP, and whoever his first agent was, I don't know who it was, they had him on Anthem, which, as we all know, this year Anthem is horrendous. So we ended up switching him. He takes no medications. He sees one doctor a year. He prefers OSU as his hospital, so I wrote him on Medigold cashback. He's like, you got to be kidding me. I'm saving $160 a month. I didn't even realize I could do that. And he said, but that max out of pocket, though, it's $7,900. That's kind of scary. I said, I get that. And so I said, there is a way, what about that number of fear is your fear? Is your hospitalization? Is it cancer? And he just told me, cancer runs in my family. It's just a thing. And I said, great, there's policies out there. And he's a PNC agent. He has an agency, and he didn't even know anything about these indemnity policies. So we went through an indemnity policy with GTL. It cost him $85 a month after we got everything on there that he wanted. And he goes, well, that's $85, but you just saved me $160 a month, so I'm still plus. I said, you're exactly right. So, letting them see that value, even though, you might, they kind of might get scared about the premium, the additional premium on top of, whatever they're already paying for their Advantage plan. Once they see that, oh, well, it's going to pay me a lump sum every time, I go into the hospital or every time I get cancer, they see, oh, well, I'm only paying $85 a month. But I just signed up for, I think he got a $15,000 cancer policy. And he said, and he got a fully renewable one. So he said, if I get cancer twice, which wouldn't surprise me because like everybody in my family has cancer, I get paid again.
So if we want to get hooked up with, let's say, GTL or whatever you said on the life side, where you've got a bunch of companies at hand, what do we need to do if we want to get hooked up again on the indemnity side? Let's just say with GTL and on the life side, what's the next steps?
Yeah, let me know, and I'll put the contracting through. Talk to Kayla, talk to Dave, and we'll get the ball rolling on that. Are you thinking GTL and more life?
Yeah, I mean, definitely GTL. It sounds like that's kind of your preferred on the indemnity, and maybe I'll start with them and kind of learn their product line and how that works before maybe I tackle a few others. I guess I'm curious about the life. I mean, I've never been in a situation so far, not that I've been doing it very long, um, where like I've never ever brought up life insurance and nobody else has I've met with, but again, who knows?
Sure. Yeah. So, and what's nice about these policies is if you're leading with life or leading with Medicare, non-Medicare health, it's cross-sellable. Now, if you go Medicare into life, that's not cross-sellable, or life into Medicare, you have to have a separate, appointment for that. But these indemnity policies and the ancillary types of products, you're allowed to cross-sell. All right. So, kind of a timeline. When you are first meeting with the client, of course, you want to go through the reason why they're there. Is it life? Is it health? Bring up those gaps and those fears that people might have, the max out of pocket, the long-term care coverage, needing disability costs. I'm supposed to text the lady today back. I forgot to do that, but I got a text from a lady who I wrote her last year on a critical illness policy, basically. That's the best way to put it. So basically, if she has some kind of if she misses work for more than 5 days, this policy kicks in and it will pay her. I think we have it set at 85% of her daily salary. And she texted me just this morning and said, "Hey, I think I might want to up this." So we'll add another policy for her. But this is all during the major what you're there to talk about. These are the gaps that they want to fill. And secure second, you can see there, secure the sale on that major policy. Don't say, well, this other policy exists, and then you get sidetracked and you forget about the Medicare plan, you forget about the life policy. The Medicare and the life and the non-Medicare health, that's obviously our bread and butter, and that's what we need to focus on for sure. But then we circle back to the ancillary. Once we have everything, in order on the health or the life side, then go back and say, hey, I know we had mentioned something earlier about you being scared about cancer or you needing that extra dental. Let's look at those policies real quick. It won't take any time. And then read the situation for what the client will want or need. Again, they'll tell you with their body language, with their voice. And then emphasizing that the ancillary products help to fill those gaps that they told you about. You can close the sale on that too. It's really, it doesn't feel like, I would say it feels even less like a sale than a lot of times your life policies or your health policies, just because it's so specific. Hey, we're going to fill this gap here. We're going to get to that vision coverage that your current policy doesn't cover. Let's go through this here in about 5 minutes, and you can do that. It doesn't take any time to go through these ancillary types of products. I'll go through the GTL website just to show you how quick. All right, so let's get out of here and get to GTL's website. All right. So you can kind of see here, there's a lot of different options. This is the Guaranteed Trust Life website. The Fill the Gaps tool, this is specifically for Advantage plans. It's kind of nice because it does pair up, it creates an indemnity policy that is based off of the specific Advantage plan that people have. It's nice, but in my opinion, most of the time it adds too much. I like to kind of create my own. So we go to quote and submit. There we go. And let's put in let's see. We'll make me 65 here. So let's go 4/7/61. That's not my birthday. We'll make this effective 4/7/26. And we want to select product. This Recover Cash, this is kind of their newer plan. That's what the type of policy that I wrote for that lady who just texted me again today. That's kind of their newer plan. They're putting a lot into that. Okay, so kind of some very easy, once you click the select product, here's exactly what your options are. They have life. I've never written life through GTL. I go the Advantage plus Elite. This is great for your Advantage plan people. Short-term healthcare, I've never written that. That's newer. The Precision Care, that's your accidental, that type of thing. Recover Cash, that's for missing work for extended periods of time. Cancer, heart attack, stroke, pretty self-explanatory. Home care, secure, another home care type of plan. I've never written the home cares. Cancer, yes. Recover Cash, yes. Precision Care, yes. Advantage plus Elite, this is for those of you selling Medicare as your bread and butter, that's where it's going to be. All right, so you can, what's nice too is you can also create this for both, husband and wife. I typically don't because they have different wants and needs. Actually, I think I've only written it for both spouses one time. Increasing benefits, so this kind of guards against inflation. I don't know. It does increase the benefits as time goes on. I don't know. I don't always go. I most of the time I don't go with that. What I typically will say on these indemnity is let's choose something that maybe is a little bit more than your coverage amount. So for instance, let's go with Medigold. Medigold is hospitalization is 5 days and $325 per day. Well, it can go all the way up to $750. There's your 320, 330. It's in increments of 10, obviously. I say, you're not always probably going to have Medigold. It's not always going to be 325. Plans are going to go up. They're going to go down. So let's put it at a number that you might feel comfortable with. Let's start at 350. That's kind of, ballpark to what you're going to spend on hospitalization. Well, you can see that adds $22.87 monthly to your premium. Your combined amount down here, $24.55. And they say, well, what would 400 do? So we go down to 400. It jumps from 22 up to 26. And they say, well, for $4 more a month, that's a coffee at Starbucks, I can get a lot more coverage. And it's really nice, especially showing people this as you're writing it, because they can see, oh, wow, for $50 more per day, I'm only paying $4 more a month. That makes sense to me. So let's say we put it there. Guaranteed purchase option rider. That's new. I've not seen what that does. So I'd have to read a little bit more into that one. Ambulance, so pretty self-explanatory. I've written it maybe one or two times. I don't think it's worth the money. Now, outpatient therapy, I really do like your physical therapy, your occupational therapy. And a lot of people definitely buy into this. They say, hey, you know what? I know I've got bad knees, I've got bad hips, I need a shoulder surgery. Great. Let's throw $50 for each physical therapy trip, up to 15 trips per day. That's $5.51. And then they will ask you if you do some kind of change up here where you went from 350 to 400 and they could see the price change, they will ask you, well, what's 30 days do? 30 days will add about 80 cents, I believe. Yep, about 80 cents. And then, oh, geez, 80 cents, and it covers me, double the amount of days per year. Yeah, let's do it. Skilled nursing, that's up to you. These types of things, read into them. This is where I do think their webinars are very informational. Not just GTL. Wellaby is good too. I've done a couple of their webinars. The Emeritus, the Delta Dental. I mean, they're all there. It's good to just know the product. Lump sum
Hey,
cancer.
Jason, can I ask a
Oh,
question
yeah.
first?
Yeah.
Like up there on the like hospital stuff. I mean, this once again is per benefit period. So, I mean, if they're in the hospital in January for something, they're in there for, let's just say they're in there for 5 days, they're getting 5 times 400. And then let's say in September, for some other reason, they're in the hospital for 3 days. I mean, they're getting another 3 times 400, correct?
Yeah, I believe last time I checked, which was probably middle of last year, the way that GTL does the recurrence on their hospitalization is it's every 60 days, it resets up to 3 times a year. So if they're in February, and 60 days goes by, if they're in for, 5 days in February, 60 days goes by and they're back in June, it's reset for them, and then they're back in 60 days later. It resets for them. The next occurrence of hospitalization, assuming it's still like last year, which I haven't seen any changes. Then that fourth occurrence, well, they're kind of out of luck, but I'm sure they have bigger things to worry about at that point too. Most people aren't in more than 3 times a year, so. Um, So the lump sum cancer rider, there's the no recurrence or 100% recurrence, even just $5,000, and it's every year it gains 20% back. So let's say the first year you have a cancer diagnosis, it pays $5,000. Let's say the following year you have another cancer diagnosis, instead of the full $5,000, it pays out $1,000. And then that timeline resets. So the following year, if you have yet another cancer occurrence, it'll still pay 20%, so that $1,000. So by year 5, it completely resets to $5,000. But the recurrence, $17 a month. Some people like critical accident. There's a small critical accident rider on this. There's lump sum hospitalization. Outpatient surgery's been more common as of late. Let's say $500 for that. And now we just put together a policy where every time they go into the hospital, they get $400 per day for the first 5 days. And they get 30 days of coverage for physical therapy, which they'd probably be making money there. We've got a 100% recurrence on a lump sum cancer policy. And we've got an outpatient surgery rider that'll pay their outpatient surgery bill. Policy fee, we're looking at $63 a month. And, if you tell people, if you show them, hey, this is all that you're getting. I mean, I've never had I've had people not buy, but everyone's always said, wow, that's really not a bad price. So people see the value. All right. It's just a matter of you bringing it up and educating them that this stuff does exist. Okay. Um, so and then you can directly apply and all that good stuff. So I think GTL, I believe their guarantee issue window, I want to say it's 65 to 70. It might be 72. I'd have to check on that one. But the Wellaby window is 65 to 80 now. So it's ridiculously high. Now their policies are a little bit more expensive, but if you're looking to get someone coverage, guarantee issue, and they're 78 years old, go with Wellaby. So it's just knowing the product. Um, this was not, by any means supposed to be a all-encompassing GTL training. This is just kind of you know, skim the finer points here, and hopefully you get an idea of something that will help. So let's go back to this and stop sharing. There we go. All right. Questions? All right. Now you know it all. All right. So, if you do have questions or you want to get Jason, I just got your email. If you do want to get contracted with these, let me know. Like I said, you don't have to have all of them. I think it might be too much to have all of them, but master two or three of them and then move on to another two or three. I think if you're going to go with dental and vision, get emeritus. Deltas, it's okay to say you have it, but it's just not a great plan. Master the emeritus plan and then move on to other dental plans. Or master, like you said, Jason, master the GTL. I think that GTL stuff is very good. I that's my go-to. Um, and I think it's very easy to use, very easy to understand, very easy for the client to understand. So once you tell them that this is going to fill those gaps, this is going to get you, that lump sum, this is going to um, cover those things that you're scared of, then they start seeing the value. So, that's the biggest thing in all of this is, you want to obviously retain them as clients. Um, so it's about building your own value. Anything that I did not cover that you can think of, you have questions on? All right. So let me stop my recording here. Let's see here. If I can, let me see how to stop recording. There we go.